Amazon's CEO Jeff Bezos is very clear about his company's mission. He invests for the long term, measuring his company's success by market share, customers, and revenue growth. If that comes at the expense of near-term profitability, then so be it. That business strategy was obvious in Amazon's latest results. Sales at the e-commerce giant jumped over 20% to $19 billion, but expenses surged even more as the company kept spending a ton of money on faster delivery, video content, and new devices such as set-top boxes and smartphones. All that spending pressured profits. Amazon posted a wider than expected loss and, more importantly, forecasts more losses for the quarter ahead.
They've always said we're going to keep investing the money, we're going to generate very little margins in the process, but top line is going to continue to grow.
In the past, investors accepted this lack of profitability because they agreed with Bezos' vision of trying to grab as much market share as possible. But Amazon's latest round of investments looks more ambitious, and that's worrying shareholders.
The concern is that the current investment cycle is different than past cycles where you're building fulfillment centers and you knew that was going to have a correlation to additional revenue growth down the line. In this case, we're building content, we're building tablets, we're building phones, and all of these investments are going to need to be renewed pretty much on an annual basis.
Amazon stock got hammered Friday. It's now down some 20% this year. The company, though, doesn't seem to be in any rush to cut back on its spending. On a conference call with analysts, Amazon's CFO reiterated the company's mantra: putting customers first is the only reliable way to create lasting value for shareholders. But many of those shareholders aren't waiting around. They want to see returns right now on all this investment. Problem is, if Bezos wants to keep competing head-to-head with tech titans such as Apple, Google, and Facebook, then he has to keep spending a lot of money. Josh Lipton, Nightly Business Report, Silicon Valley.